This is the easiest supply and demand strategy to get funded, and it actually works. I combine divergence with high probability zones to catch clean sniper entries. Let me show you how. First, let's explain the strategy. First thing we will do on our checklist is identify higher low, higher high. When the price is making higher highs and higher lows, this indicates that the price is in an uptrend. Additionally, when the price breaks a recent high to make a new higher high, it is called a break of structure. You can mark the broken recent high as BOS, short for break of structure. Let me remove this. This is called break of structure, short BOS. When the price is in a downtrend, it will create lower lows and lower highs, thus break recent lows. This is how you would mark a break of structures. Now that we can identify the uptrend or downtrend as well as the break of structure, let me explain the imbalance. An imbalance refers to a situation whereby orders significantly outnumber sell orders or vice versa, leading to a potential shift in asset prices. In simple words, imbalance candle should not be covered from the back or the front. If the previous candle covers this candle, then the imbalance is sufficient. There is no imbalance in theory. Same thing. If the next candle covers our present candle, the imbalance becomes invalid. Now that we understood the imbalance, let's see how to draw the correct supply and demand. You can identify the supply by marking the last opposite candle before strong move. Mark the bullish candle's high down to force bearish candle. Let me show you. This is the high of the last bullish candle down to the first bearish candle. This is how you mark the supply with a rectangle. Same thing goes for the demand. Mark from the below to the first bullish candle, either wick or the close, it doesn't matter. Now let's talk about EDM or LED. EDM means equilibrium divergent mitigation, and LED means it is short for liquidity equilibrium target. We will use this indicator to confirm whether the supply or demand will hold. So this is how you can use it. When the price is at the supply zone, look at the indicator. What you want to look for is simply divergence. It should show a higher high when the price is showing a lower high. Let me mark this. You see, we have on the indicator a new high, but on the price action, you will see it is making a lower high, only mitigating the supply. This increases the probability of the supply halted, so you will look for entry confirmation to trade away from the supply. Let is when this middle line is retested, confirming that the supply zone will hold. You will see that supply zone is being mitigated while we are having this line retested. This confirms that the supply probability to hold is increased. So we can trade it. We have covered the necessary checklist for supply and demand that actually works. Now let's look for a chart example. Okay, price here is making higher high, higher low, higher high, higher low. We have another higher high here. This is our break of structure. The recent high was broken here. We have our imbalance here. This is our demand. Let's mark it from the below and mark the first bullish candle extended. Now, after mitigation, we want to see if this demand will hold. Let me change the color. we have here EDM, price mid lower high, but on EDM we see lower low. So this confirms that price, the probability of this demand to hold is higher. To look for entries, you can enter either from rejection candle. This is our first rejection candle. You can either place your stop loss below the demand or in the middle to give it a few bips. Give it a few breathing bips so your stop loss won't be hit. Or the best entry possible is either short on lower time frame, change of character, or break and retest. Let me show you break and retest so you can stay on the same time frame. You mark the rejection candle. You wait the first bullish candle to break it. In this case, demand. You would your first bullish candle to break it, then retest again. You will look for another rejection, then place buy stop above it. Stop loss would be the recent low inside the demand. You can either target the recent high, or a better way to do this is you can trail every 15-minute or 5-minute. You can trail stop every strong bullish candle. Okay, this was a strong bullish candle, so we will place our stop loss below it, and we are at profit at least 0.71 R, almost 1 R. We will trail it like this every bullish candle until we are stopped out. Almost stopped out here. We are buying, so spread can't stop us out here unless it slips. We with another strong bullish, which is here, strong bullish candle. These are not the strong bullish candle. You still wait until you get this one, the very strong bullish candle. You keep trailing until you are stopped out. Maybe here. Yes, this one a strong bullish candle. In this trade alone, you would have made 1 to 10 RR. Let's look for another example. We have here a supply less market. This is our supply. We have strong imbalance, as you can see. Let's mark it up until here. Maybe the close of this bearish candle. We can also identify break of structure. Now, what is left is the ETN to confirm whether this supply will hold or not. As you can see, the indicator is making higher high, while our mitigation, recent mitigation is lower low. This indicates that the supply, there's a high probability that this supply will hold. Now, don't be confused about this. We have our rejection. After it rejected, broke low. As you can see, let me zoom in. After clean rejection, it broke low. After breaking, it went up again, retesting it, but never broke this candle. We can set limit order from this candle or this candle if you like it, but I will set it from this candle. TB would be around here, maybe at 2 pips, like that. You can. There's two things to do to target your take profit. Either target the recent low or trail stop every strong bullish candle like this. Do you see? Like that, up until here. TB would have been the same thing, but there was a probability that price would have continued going down. Let's look for another example. Like you have here another example. Now recent high would be this one. We have break of structure, we have imbalance, but this time we have two demands. First one is this one. This candle is too long. You wouldn't mark this long candle. It is way too long. We have also another demand here. Let's mark the whole zone for better view. Now we need to confirm whether this demand will hold or not. As you can see, this might be a weak EDM. So, but it is still ADM. Same thing. First rejection candle, break, then retest again, then buy from a recent candle that didn't set a buy stop from the recent candles that retested. TP would be the recent high either, or you would trail stop it. Let's look at lead example LAD. We have here a break structure. We have imbalance, of course. Our demand. Let's look at the indicator for look. This time we are looking for lead. As you can see, here's our lead. It's very simple to use and powerful. Uh, this strategy, it can give you high RR and high win rate. If this made sense to you and you ready to take your trading seriously, join the free Discord. It's all real value. And if you want guidance step by step, just DM me about mentorship. You can find this indicator in my Discord. Let me know if you need it.